Hi, welcome back to the channel. My name is Dave, and today I want to talk about the pluses and minuses of paying off your mortgage. I just took out a brand new one. For 30 years, I'm going to be paying on this mortgage, and I plan on milking it out for as long as possible, but that's not necessarily the right decision for everyone. So I want to talk through both sides of it today and let you know what I've decided to do myself. I was lucky enough this week to go down to Florida. One day down, one day back, but it was just long enough to get a nice little taste of 75-degree weather in shorts, drinking beer, hanging out, visiting this house that we're building. So for me, this is my big dream that I've been following for a while. Trying to build a house down there in Florida that I can escape to in these gnarly wintry months from up here in Ohio. Because if I look at my backyard right now, it looks like this. And as I drive to work, it kind of looks like this. I can hardly see the road. But I am an Ohio boy and I don't mind this most of the time. But January, February, it'd be great to go down there to Florida. So makes me think about why we work so hard at growing our wealth in the first place. It's not just to stack money up really tall like Scrooge McDuck and go, wow, look what I got. No, it's more about, finding utility with money to enhance our life, right? It provides utility. It makes life simpler in some ways. It gives us security in some ways, right? It helps us to help others that might need it, right? We can buy new things with all this money that we might be pursuing, or we can visit that place we've never been able to get to, but we've always dreamed of. That's why I work hard. So as we accumulate wealth, we reach different plateaus, right? The first one might be taking an extra week to travel somewhere you've always wanted to. It doesn't affect anything, right? Maybe it's paying cash for a car and it doesn't affect anything, or moving in that new neighborhood you've always wanted to and it really doesn't affect anything. So that's kind of where we're at. We're taking on this big mortgage and I think we're okay, right? We can pay off the mortgage because we built this great foundation and we've got the steamrolling wealth effect going on. Or we can take that money and we can invest it with all the skills we've developed over time, trading options, buying real estate, and everything else. We feel like we can defeat that evil low interest rate mortgage, put extra money in our pocket by investing. So that's what we're going to talk about today. If that's what you're looking for, please stick around. Whoop. Now, first off, there is no right or wrong answer in my book to this question. Should you pay it off or should you invest it? It's really up to you and your risk profile and how you want to handle things. But if you decide to pay it off, the first thing that you're going to benefit from is better cash flow. You have all that money that you pay into your mortgage every month, and now you can spend it on whatever your heart's desire. You're also going to have less stress because you just don't have a mortgage anymore. You're living the American dream, right? You've achieved it. You've paid off your house. And you also have more security in case there's a big significant change, like a job loss or a major market correction. I'm not just talking about January 2022. I'm talking about January, February, March, maybe April. Now you're really stressed out, right? So there are nice advantages to paying this off. With that said, on the investing side, you have access to your money a lot easier. Obviously, if you don't pay it off, then the money is there, probably in the stock market and pretty easy to get to. Now you can say if I pay it off, I could still have a HELOC, home equity line of credit, a interest-only type of loan where you could access that money if you needed to. So you could do that and pay it off. But probably the biggest component of this, and this is going to sound funny to some people, but this is kind of a mental trap for me to keep me sharp. I'm not a fire movement kind of guy. I don't want to retire early. I want to stay in the game as long as possible and continue to grow and expand and do all these kind of things. I don't want to retire early. So for me, this kind of keeps me in the game. So it's a mental trap to help keep me sharp. So pay it off or invest. There are advantages to both. So this is a chart of the 30-year fixed rate mortgage average in the United States, going all the way back to 1970. And you can kind of see how bad it got in the 80s. How we've been on this downward trend ever since. So we don't have much further to go down. And with rising interest rates, I expect it to uptick. I'm not trying to scare you. I don't think it's going to head back to the 1980s, but I think it's a great time for me to lock in a 30-year fixed rate mortgage that I can carry with me going forward. Because Ray Dalio said something a couple years back when he said cash is trash because we were printing so much money. But I think my feeling is that we're headed towards what was made famous back in 1987 when the stock market crashed, and that was cash is king. So I want to have money with me. I don't want to have it buried in my walls. I want to have it invested, working for me as interest rates rise. Another fun way to think about how inflation will affect this is if you move forward 20 years into the future after taking a fixed rate mortgage today. Let's say you have a fixed rate mortgage and it's $2,200 a month. And when we catapult forward 20 years in the future, you've been making your payments every month. And let's say your salary today is $100,000, but you keep up with inflation because you're working really hard. So Every year, you're keeping up with inflation, getting a 3% raise. 20 years from now, your $100,000, you'll be getting paid $181,000. So right now, in today's dollars, on a $2,200 payment, it would be 26.4% of your salary. But in the future, it would only be about 14.5%, almost cut in half. Great job. Time is on your side. You're doing quite well by just letting time roll and inflation take its toll. Your future buying power is going to be a lot greater than it is today. So if you do decide to do this, I would stress test it and I would do some cash flow statements. Make sure everything works out for you because you're going to have this cash outlay all the time, right? So my plan is to keep the cash and use the stock market to defeat the evil mortgage. That's my plan. Right? And as an example only, let's walk through this, right? Let's say you had a $500,000 mortgage, for example, at 3% over 30 years. Your monthly payment would be $2,108.32, or about $25,300 per year. Of that $25,300, $10,400 would be principal payoff in year one, about. And it would only increase over time. But that's 41% of everything you're paying to you, right? Paying down your mortgage. So to pay off $25,300 with $500,000 that you're going to invest in something, we would need to produce about 5.06% return after tax. So depending on your tax rate, will depend on what this next number looks like. But I assume a 40% tax rate, which would mean I'd have to produce 8.4% return, or I would need to generate $42,166.40 before tax. So if I can do that, at the end, I will have paid off my mortgage, and the principal amount I started with will still be sitting there. It'll be beautiful. So how will I do this? Well, I plan on putting in a brokerage account and doing what I've done, that I have plenty of past history to support that I can do, which is get about a 10 or 12% return every year, selling puts against undervalued stocks, buying stocks that I think are undervalued and selling covered calls. I think I can generate income, even after crazy Januaries like this, where my basis might shrink back a little bit. I think I can continue to do that and grow this portfolio and defeat the evil mortgage. So that's the plan. I would add that I might feel different if I wasn't so broadly diversified. I'm very fortunate that I've got real estate and a business, and I've got all these stocks and everything else that are kind of working for me. So I feel like I can use this as a platform for this particular investment, and I think I'll come out ahead. So that is the overall game plan. Now, if you have any questions at all on this, please ask down below. I'd love to hear your comments. If you wouldn't mind, like and subscribe if you're looking for this type of content. We'll have more coming out. Thanks so much for watching. Have a great night. Whoop.